UnitedHealth stock has been on fire lately, and a lot of people are asking why. In this video, I'll break down what's driving the rally, what it means for the healthcare sector, and also I'll share some of the moves I'm making inside my own portfolio. So the biggest reason behind UnitedHealth's surge is its strong performance in Medicare Advantage. About 78% of members are now enrolled in plans rated 4 stars or higher, which is a huge deal because those ratings unlock federal bonus payments. That means more revenue, stronger margins, and investor confidence. On top of that, UnitedHealth reaffirmed its 2025 earnings guidance, basically saying, yeah, business is stable despite all of the headlines. And then there's the Buffett effect. Warren Buffett's Berkshire Hathaway put over $1.5 billion into UnitedHealthcare this summer, which gave the stock a major stamp of approval. Add in a strong market rally overall, and boom, here's your surge. This comeback comes after a rough few months. Earlier in the year, the United States Health got hit with the DOJ probe into Medicare billing practices. They cut their earnings outlook, and leadership turmoil shook investor confidence. So this rebound is partly about the company showing resilience after all that noise. With all that being said, I unfortunately did not add any new shares of UNH to my portfolio. I was thinking about buying it when it was around like $240, $250, but I just wasn't pulling the trigger because I was more investing into Google and Amazon, which paid off pretty well for Google and Amazon. You can't win them all, you know? But I did not add any United Healthcare shares to my portfolio while it was down. Yeah, I'm still holding on to my core positions such as Visa, and Amazon and Microsoft. But with United Healthcare, I'm looking at it as a long-term stability play. Healthcare is essential, and even with regulatory risk, a company this side usually finds a way to adapt because United Healthcare, although their CEO did get assassinated early in the year, they're still managing to come back and with persistent margins, profits, and numbers, which is a very good when you're looking at a company for long term. And you never know, United Healthcare could dip in the next few months to a year. You really never really know with stocks like this, but with that, I've been keeping about $400 in SGov. It's a treasury bond that I just like to park my cash in while it's just sitting. I have about $400 in there, 9% return, or 9-cent return, which isn't anything, but it's better than just keeping my money in a 0.1% interest bank account like Chase or Bank of America. So I'm just waiting for dips, having this fund. I'm pretty much just waiting for dips and strategizing just so I can get the stocks that I want at a good price. I also have about $148 sitting in my buying power, which I was able to scrape up from working this weekend. And I don't know what to buy. I would have bought some United Health if it didn't shoot up. But to be honest, the market is pretty overvalued right now. I mean, I'm up 124 today. And my year-to-date return, let's go check this out, is sitting at 13%, $2 away from $1,500, which is pretty great because around April time, we were in the negative by that much, but we climbed back. We stayed consistent with our investments, and I would really like to thank Google for this, random surge in my portfolio, sitting at about a $557 return, almost 29% return, which has been by far my best investment in my portfolio in like history. And on top of that, we have a little $2.16 dividend coming in on September 15th. So with all of that portfolio talk to the side, now you guys know why the healthcare stock has been ripping higher and higher and how I'm going to be adjusting that to my portfolio in the future. Do you think this rally has legs or is it short-term bounce? Let me know in the comments below. I want to hear your take. Don't forget to like, subscribe, and hit that bell so you don't miss the next update. I hope you guys have a great day. Peace.